good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we're now at August 3rd, 2021, just getting on towards 5:30 in the afternoon. Remember, tomorrow, Wednesday, is when my live webinar will take place. I'll open it up at 12:15 p.m. for you to come in, write any questions you have, but you'd really help yourself and me if the questions that you have, you ask me ahead of time. Now, when you sign up, if you haven't done so yet, you can do so by clicking this icon up here. It will take you right to the sign-up page. After you sign up, you'll get your user ID and your password. Everything's in there. There's also a note from me if you click my email address there, you can write me your questions. It's that simple, and it gives me tomorrow to prepare it before we go. Now remember, I will cover for you the futures markets, spiders, ETFs, individual stocks. That's what my specialty is. I look at all those and I try to come up with a game plan for you. For the enhanced Bollinger Band people that have taken that other course, folks, you got to be jumping up and down in your seat. Now, I do think some of the pros are taking a bit of money off the table tonight. It has been so wild in this, and you have been right on the cusp of losing the embedded reading and then gaining it right back. Today was wild, to put it mildly. The market has got, on one hand, it's petrified about COVID-19. We wake up in the morning, and the news for me started off when I was watching about 4:30 or so. The first news that I'm listening to early is that the National Guard and the Army's going down Louisiana, Florida, parts of Florida to help again set up those hospital beds, that the hospitals in Louisiana especially are overrun. The system is broken with the amount of new people coming in for COVID-19. That's what I heard. I'm not down there, so I have to listen to what's in the press. You think that doesn't weigh on the market? The market's looking at China having the problem, now us having that problem. So it's very concerned with what's going on. It's also earnings season. So as the earnings are flowing out, you got two things going. You got that fear hitting in the market. You've got the government today coming out and saying again, and I'm talking some state governments, New York City. You want to go to a bar, you better show us your card. If you're not vaccinated, in many cases, you're not getting in. Other spots, workout gyms, so on. So what's beginning is the process of people that don't want to be vaccinated have that right not to do it, but businesses have the right to not let you in. It's getting beyond the mask that they're going to make you wear in certain stores to other facilities just saying you're not welcome right now. The idea to get the herd immunity going in the country. I've just read a report at about 5 o'clock tonight that said that used to be an idea of 70% and 80%. People are questioning to get to it. Do we have to hit 90%? So the pressure on unvaccinated people not going away. It's going to increase. And unfortunately, even though they have the rights not to be vaccinated, they're going to find that they lose certain things in certain states. It's not everywhere. Okay. Let's go here. Here we are, new all-time highs so far. So going into Wednesday, middle of the week, the market's at a new all-time high at this point. The close isn't in. You're up a 0.5 percentage point. When you take a look at the chart action, if you think this wasn't testing the embedded reading, you'd be so wrong. It was. And when I was doing this morning's report, I wrote to people and I said one thing. When I was doing the report, I said, you get tested. And when I was putting out the videos, I'm going, you either believe in what you're doing or you don't, but you can also take some money off the table as you rally back in there if you want. Okay, but the test was here not to blow out of your position early. And the reward came late in the day as the market reversed course, came back from the lows of 40, today's low in the market was 43.65, and up you went 50 handles. That's a $2,500 move. It's big. You then look at what the pattern is, and it got me nervous. I saw the break, and now with this break, you had lower highs, lower lows. When you were at the low of the day, You were flirting with being under 80. You had gotten under it in this market, came back, and I'm watching what the readings are, and I'm going, oh boy. There were times where I go, well, at least I had entered the market right for my clients. And the market came back up, like I said. Now you can see what it fell to. We were talking about this. I want to show this to you. If you broke this low, the goal would be whatever the 18-day average is one of the targets. It's exactly what this market did. You went to the 18-day average plus. That was the number. This was the low. And the market did well. That does not mean you're out of the woods on this trade. You still have lower highs, lower lows, so the trend is down. When we add the Bollinger Band, the resistance of that has not been hit since back here. That is 44.53. So with this, what we have, the trend down, the bias up. But when you have an embedded reading the way that I teach this, it rules the day. And I promise you this reading was flirting with losing it during the day. And I'm sitting there, what do you do? Well, now it's pretty simple. We have an idea because of that if you're under 43.65, with today you were losing the embedded reading. So I'm going to guess tomorrow any settlement under that will cause this reading to be lost. Conversely, take out this high, you caught an area here of congestion. It doesn't mean you have to go right on up because the trend won't be up. All that you'll have done is broken the downtrend and negated that. So the key is first, to get some momentum going, take out 44.1975. You haven't done that yet. Tonight you're 7 points away from that, so we'll see if it can do it. In the NASDAQ market, higher lows, nope. You've got higher lows, but you got lower highs. So, confusion. Are we embedded? Absolutely not. So when you're not embedded, and that's what you have, if I come over here, you'll see, yesterday, watch, there's your other day, 79. You're not there yet. So nothing to do, overbought condition, in an uptrend, fighting a huge battle at the 18-day average of closes. In the Dow, I was sitting there again. I was taking out my candles this morning because the embedded reading has been in play here. And as such, I would be telling clients if they took that course, they should already be long. And obviously today when this market on the Monday broke down and then you went through the low, you were losing the embedded reading, but you got to wait for the end. And by the end of the day, you came roaring back up in the market. And now we have a number. We don't want to see this market under the 34,600 level. If it can move up, the resistance is 35,315. In the Russell, no. This is not the place to be. You have a higher high, lower low, and the market that is overbought, fighting and being capped at the 100-day average and support at the 18. Just not the place to be. VIX cash. I kept looking at the VIX today and I wanted this to break down. And I mentioned that this morning in my subscriber video. Lower highs, but we have the higher low. You have an outside day down. Now here's another pickup from that. When and if you take out 1822, especially if it's tomorrow, Wednesday or Thursday, it'd be a sign that a trap for the bears has been sprung and this market wants to kick in the volatility, which would likely be bearish in the stock market. Until that, if the market just drops from here and takes out 1719, whoa, if that happens, you're probably making that run at that point to the upper Bollinger Band in some of those stock indices. Again, I'm saying that if you ever get down to that lower band, I'm expecting the pros to write puts. So people have been wrong on interest rates. People have been wrong trying to figure out what this market's going to do. They keep talking about the impact of the COVID. We see it, but it's short-lived in the financial markets in stock indices. What's helping stock indices has been what's going on in the bonds and the notes. And the yields keep falling. So people are going, where can I go? Now, remember, a lot of what's going on is dividends and these corporate earnings are coming in. There's a lot of buybacks. There's less stock. I was watching Cramer early tonight as he began his show talking about how many IPOs and they're flooding the market. And I get it. I understand what he's saying. But the reason that's also happening and those IPOs are getting bought is because there's less stock in the other parts as a company comes in and says, I'll use $1 billion and I'll buy back my stock. Well, that's $1 billion worth of stock that's not going to be out there anymore. Something to think about. Law of supply demand. Higher lows, higher highs, market that is overbought. I don't think you attract new buying at overbought levels. I'll let somebody else have that. Same thing in the 10-year note, but I see the trend is up, but I see pretty solid resistance up there. This is the week, remember, we're going to get a lot of jobs data. You're going to get the ADP numbers, you're going to get the claims, and then you get the jobs data. There's a lot of volatility coming at you this week. In the dollar index, should the market clear 92.18, it'd be a pretty good sign that this break from the Bollinger Band high to the low has run its course and the market's ready to possibly go back to the 18-day average, that number I call the line in the sand, for neutrality at that point. Now, the way the setup is, if it did that, you might even end up with higher lows, higher highs, and then the question is, if you close over the 18-day average, would you get a buy signal? Don't know, but I'm just giving you the what ifs. Flip-flop that for the euro. What do you do the first times you hit that upper Bollinger Band? If you haven't taken my enhanced Bollinger Band course, do so. You learn what happens when you get down here and here. It isn't hard. It's pretty simple to look at. Then we get to the British pound, which is having trouble right now at the 100-day average. It hit its upper Bollinger Band, had its reversal, fell back, and it's fighting right at that number. Again, that is so typical of a market. The 100-day average is often an important number. If you get under it, you'll come back often and test it. And then if you get back under again, be careful. You could really get a move. Flip-flop that for the upside. See how it challenged it here and just stayed over it. So you learn to work with these averages. And, you know, that's something that I teach in my regular course on charting. But are we embedding? So let's get rid of today because we can't use it. We don't know where you're going to close. Yesterday, both numbers were over 80. It's this simple. And the day before, they weren't. You're overbought. First challenge of the Bollinger Band. I think the pros came out of the market completely. Bitcoin, overbought, still running to the upside. You still have a gorilla glue trade. What does that mean? It means this. You got up, you hit the Bollinger Band, Bollinger Band, Bollinger Band, Bollinger Band. Now, tonight's still early. I don't know if it'll hit it or not later in the day. But if it starts breaking away and doesn't hit it, it's often a sign the market's ready to roll a bit backwards. Trend is up unless you take out in this market 36,425. I appreciate somebody caught this, that the number I had is 103 the past 2 days in the Brent. Let me tell you what it was. The formula got somehow screwed up. Instead of taking Brent from WTI, it divided the two and you got the number 103. Run it on your chart. You'll see what happened. As soon as you pointed that out, and I do appreciate it, it helped me tremendously. In this case, which is now right, of the October Brent versus WTI, as long as you stay over the 18-day average, you have a bias for the first month, which is the crude, but the Brent, not the other. Now, we just saw the API numbers. They were bullish. So when you look at those, that's a good number. Remember, at 9:30 in the morning, we get the EIA stockpile. We're not getting much of a response, though. Let me come first to WTI. Not getting much of a response on a bullish set of numbers. I find that interesting. If I come back to the Brent, the market just opened. It, too, isn't paying much attention to that. Of course, it's not the Brent that we're worried about. The pattern is one of a higher high, lower low. You're not trending in this market. And you got overbought and you're working the correction off. And WTI, actually the momentum is pointing down. The bias is down, but again, no trend. Higher high, lower low. Let somebody else have that. We then get over to gasoline. And in the gasoline market, this is how the market has been looking. Now, Both numbers, I want to come right here, we're not over 80. Here's the first day they're both over 80. Day 1. Day 2, that was Monday. Yesterday, not embedded. You don't have an embedded situation. So there's nothing to do in these markets at all. They're just overbought, void of a trend right here. And that's where I'm at on these markets at this point. I'm fascinated with natural gas, how strong it's able to stay with all this. What natural gas did is it lost an embedded reading, which often means a run back to the 18-day average of closes. So it started that, but what it's really been able to do is hang in there, and it's letting the 18-day average come up to prices. Fascinating, often a sign of even more strength could be coming in that market. Now, I want to remind you, you keep hearing me talk about embedded slow stochastics. They're a very important key to my analysis of charting. Want to learn more about it? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.